Hello, hello. Time to examine a trendy stock and a kind of trendy company right now, since it gained 14% today and it seems to be in the charts for newest trends in the stock market. And so we're talking about Tilray, a well-known pharmaceuticals company, which is handling cannabis as a pretty large part of what the company is doing. And so Tilray actually posted a surprise profit because of some cost cuts. And for that reason, it actually gained 14% today. And we want to examine the stock and see whether it's a potential acquisition, a potential for acquisition for our portfolio actually, and see whether it's actually worthwhile to take a closer look at its financials and maybe even decide to add it to our stock portfolio. And the way we always start is by taking a look at the market cap just to get a sense of how big the company is. Right now at $3.4 billion, which is obviously a very big company, but not like some of the huge companies in the stock market like Facebook or so. However, it's still a very respectable market cap. And so we're taking a look at the shares outstanding here, and you see that the company has been issuing some shares. However, the company is a new IPO, and so you would expect a little bit of issuance of common stock. So I wouldn't necessarily reject the company because of that. But we will definitely notice that in the cash flow of the company that they have been issuing stock. And it's worth noting. We will need some more years of data to make sure that the company is actually not really diluting investors and that these are like one-offs here. So I cannot really tell for sure right now. Now the company's stock price has been going down and down, and back in these levels here in June 2021 or so, the company was doing great, and that had a lot to do with the current trends back then. I mean, remember there was the sale of cannabis was becoming more and more legal in more and more states, including California, and so this prompted investors to actually add the stock to the portfolio to their portfolios, and so the company and the stock gained quite a lot of steam here, but then kind of dissipated here the whole price action and went down to about 7.29 right here, $7, close to $7, potentially giving us a nice entry here. But still, as value investors, we don't just look at the price. It's good for trading, but not for value investing. We want to take a look at what's going on with the company and whether it's a potentially interesting play for us. Now, let's examine the financials. Let's take a look at what the company is doing. So the income statement of the company displays an image of a company that's growing its revenues and gross profit, with a little bit of stalling in 2021. So maybe that has to do with the pandemic. I'm not sure, because a lot of the pharmaceuticals efforts have been about COVID. So I'm not sure whether that has to do with a slowing down of the company. But you will see here that the net income of the company is negative, is in the negative and growing negatively actually. So that's not great to see. And the balance sheet of the company is is a very interesting thing, because you will see here that the total assets of the company were hovering at around $1 to $2 billion, and then all of a sudden they went to $6 billion. And you will see here that part of it is because of the goodwill and the other intangibles that gives this kind of insane growth. And likewise, you see it in the total equity here, that the company's total equity is at 4.5 billion, when it used to be 1.2 here, 900 million, much less than what it is right now. And I was wondering why that happens, and I researched that, and I will show you the reason that this is the case. And so, while I was researching that, I bumped into this article from the Monthly Foo, and it says here there is nothing good about post-stock goodwill, which you would expect. And it says at some point, the reality is that they have not done a very good job of determining a reasonable value, grossly overpaying for acquisitions. And you will see here, if you scroll below, that for these three marijuana stocks plus Tilray and its 155 million in goodwill from the purchase of Manitoba Harvest, the industry has racked up more than 4.5 billion, which is what we saw, in goodwill when converted to US dollars from Canadian. I repeat, four of the biggest marijuana growers have more than 4.5 billion in combined goodwill on their balance sheets. And so that has a lot to do with what the article says here. It's mostly what the article says here. It's about the acquisitions, actually, that adds a lot of extra goodwill for who knows if it's a good reason. I kind of doubt it. I want a company to be making money for their balance sheet and not just have goodwill, because goodwill is a little bit of a kind of like a brand thing, sort of like almost it's not imaginative. It does have some merit, but like a $4 billion goodwill for a company that's selling pharmaceuticals, I mean, and that's not like a huge company. I don't know. It just sounds extremely excessive to me, and I wanted to mention that. I don't think you should give too much attention at the balance sheet, to tell you the truth, just because of that. That's a very, very important reason, I feel. And now that we examined why the goodwill and intangibles is so high, let's go back and take a look at the cash flow. The cash flow of the company, and we did see that the net income is growing in the negative, and so we will expect to see some negative operating cash flow here, and that's the case. And you will see that the company has trouble making money and losing money. When it was actually making money back in 2007, that's also kind of a negative sign, because it's actually growing worse and worse over the years, so not great. A little bit of investing here, but that's probably not a reason for concern or a reason to be happy here. And as you would expect, financing, the company has been issuing common stock, we saw that earlier, and has been getting debt, we also saw that, and so that's not great. And now I want to show you something in solvency, because in solvency you are looking at total debt to equity, which is like 12%, 2%, 28, 21, and you are like, okay, this is awesome. I mean, the company has no debt. However, a lot of the equity was about the intangibles and goodwill, and so this is not really real. The actual number is actually probably more than 100. You'd have to exclude the goodwill, because remember, the goodwill is a brand. It's not cash, and it's not something that can be sold directly for cash. I mean, you could be the best company in the world, but if you're not making money, nobody wants to buy you. What's the reason? What's the point? I mean, so goodwill is a little bit of an air thing. I mean, it's useful, it's good, and it has its merits. But in cases like that, I wouldn't pay attention to it, especially when I'm calculating debt. And this is why you see the Altman Z score is still very low here, like before this extra 21% because of the extra assets. This goes from 0.37 to 2.67, which would seem fair and close to normal, but in reality, it's actually more like this, like 0.37 or so, which is pretty bad, and it points to a company that could default in the future. So this is not looking great. So what would I do myself with Tilray? So while I like that the company is going down and you could purchase it at a better value, I have trouble with the fact that the company is not making money and its cash flow is growing in the negative. So it's not making any cash flow, and it doesn't seem to be reverting that issue, that fact. Plus, a lot of its assets are kind of imaginative. I mean, they're not imaginative again, but they are goodwill and intangibles, and so that doesn't play well with me. I want to see actual cash and investments and actual money being hoarded in a company, within a company. And so for me, this one would be a pass. I wouldn't buy Tilray even at this valuation, even at this low price, supposedly low price, I guess, compared to what it was at least. I just don't think that this would be a good addition to my portfolio. I could easily see the stock going down even more in the future, so I wouldn't add it to my portfolio. Anyway, thank you for watching. I hope you enjoyed the video. If you did, please leave a like and subscribe. And in the meantime, take a look at this video that I make, where I'm talking about Warren Buffett and his latest addition for Alibaba to his current stock portfolio. Thanks again, and I'll see you soon. Bye bye.